Godric here, your stock market mentor. Good afternoon. It's March 1st in the afternoon, Friday. We're going to do a stock market Friday today for you. Talk about stocks, talk about what's happening in the stock market. Welcome. Godric here, your stock market mentor. Appreciate you. Mink, welcome. Gordox, welcome. I'm going to touch base on our stocks today. I have a few stocks for you if you like them. I don't know. Market is creeping up. It's still edging higher. We're getting to more all-time highs. The Dow Jones went up to 39,087 plus 90. That's not an all-time high, but the NASDAQ hit an all-time high. NASDAQ 16,274 plus 183. The Qs, now we know the Qs are the top 100 tech stocks. QQQ index 445 and 61 cents plus 661 with 43 million volume. That's the all-time high. Welcome, Dan. Welcome, Gen X. Appreciate you. Give me some likes if you like it. Give me some shares if you want to share. Talking about stocks today, Stock Market Fridays. Godric here, your stock market mentor. Appreciate you guys. The S&P 500 hit 5,137, up 40, all-time high. Bitcoin also is up today, 62,413 plus 1,100. That's kind of meaningful. I think I like Bitcoin because it's like an alternative. It's not just stock market. It's showing like a commodity, like a tech commodity, right? Just diversification. I'm not telling you to put everything in Bitcoin, but back in the day, my friend told me that, if you want to send $1 million, you can just send it in Bitcoin. And there's no, interference, FDA, no banks, no IRS, and that was kind of interesting to me when you said it that way. So I want to talk about 5 stocks today I have for you. I like them, different reasons, but the first one is NVDA, right there, 822, up 31 points today. It's just going bonkers. It's going like crazy. NVIDIA, of course, does computer chips. It does graphic cards. But, however, they also do AI. It's one of the big AI companies. There's only a handful of AI companies out there. If you want to invest, I say probably NVIDIA is probably the best one. Different reasons, but mainly because they already have like a platform that's doing great with the graphics cards. A lot of you guys who have laptops have the NVIDIA GeForce graphics card in there. So they're already a successful tech company without the AI. You throw the AI in there, and then that gives them like another platform, another avenue to make money, to be on top. They have all the employees, all the infrastructure to be successful. They've already have a stock market company that's been going for I don't know how long, over 10 years. And that's why it's good. So we think the price on NVIDIA is going to go to around 900 at least. So my target's 900 for NVIDIA. It's 822 today. It's going to be a roller coaster ride, right? Because there's so much volume, so much trading, so much hype. Traders are going to take their profits, right? But I do think it'll edge higher. It's going to join Apple. If it hasn't already, it's going to join Apple with a $2 trillion market cap. And I think that's pretty substantial. Probably will pass Apple. I think Apple hit $3 trillion market cap at the top market cap before it corrected. But I think NVIDIA is going to pass that because, that's just where everything is going in that direction. Welcome, James. Carlos. FOMO, welcome. Appreciate you. Send me some likes. Send me some shares if you can. Godric here, your stock market mentor, talking about stocks. NVIDIA. So I think NVIDIA is a buy if you want to pick up a few shares here at 822. I like it. I'd rather you buy one share in NVIDIA than 800 shares of that dog shit penny stock that you think is going to go somewhere. That has no profits, has tricky volume, has few or no employees, have no product that you can buy on the market. That's why NVIDIA is good at all those counts, because they have all that. Palazian, welcome. Nep, welcome. JC Ree, welcome. Pearl, welcome. Appreciate you. Jade. Talking about stocks today. So NVIDIA is the first stock, number one. I think that's why it's good. It broke through an all-time high today, 822, plus 31, with 40 million volume. I think it's going higher. I think in a lot of ways, high-price stocks are better than low-price stocks because, why? Because they prove themselves. They prove themselves by going up and up. And if they have a consistent trend going upwards, then the investors are making money, then the stock's performing, and it's a successful stock because it goes up. The other stocks that kind of go across or go down, obviously those are to avoid at least the trend is down. That trend is down. If it's going down, you're losing money. If you're long, it's going up, you're making money. Most traders are long. Most traders are buying, investors. Not doing shorts right now, but there's always that. If you want a short, you can always buy a put. You can always sell a call. It's there for you. Welcome. If you have a question, just put it in the comments. You guys can hear me okay. Greg, welcome. Jade. If you have a stock, we can talk about it. You can put a comment. But I'm just going to give you probably 30-minute market cap today. I'll be back. I'm planning on being back next Friday. If you want to put your stock in the text, I will. In the comments, I will try to review it for you and give you some feedback on it by next week. I can do that. You can also DM me, and I'll get back with you on that. Don't be upset if I tell you it's trash. I have like a strict criteria for my stocks. Next one, Netflix. Netflix is good for a lot of reasons. Let's see, I have here. This is the Qs. Let me talk about the Qs. It's not one of my 5 stocks, but I'm in the Qs right now, like with the call option. And the Qs also hit an all-time high. Basically, it's the top 100 NASDAQ stocks in the index. And it's meaningful because they have the best stocks like NVIDIA, like AMD, like these Microsoft, these stocks that are breaking new highs, and we're in this bull market, right? We had kind of had this late Santa Claus rally where things were going up in the later phase after the new year, and it's still going that way. So we're just riding that wave, right? So, like, what they can do with the Qs, like if I can get the picture here for you, you see how it's 445 up 6. The volume there is 41 million right there. So, like, let me see if I can show you. This is Roku. Let's see. Let's see if I can show you a call option. That's NVIDIA. That was earlier today. It closed up 31. Just breaking through, going up. This is Roku. Probably my worst performing stock. You guys have followed me and know that we're down in Roku. We're just waiting for it to come back up. Like we got slammed, we got beaten, got hit over the head. It went down after earnings. But I think it's a good buy now. My target price for Roku is 110. So let's say give it 3 months. So you could, pick up a few shares here, call option here. Roku sells that little gadget to stream your apps like Netflix, like Hulu, in your living room. So they have a product. Okay, here's what I'm going to show you. Here's a put on the Qs. I'm going to show you something. Like with institutional investors or professional investors, they don't have the luxury to lose money, so they're always playing both sides of the market, right? They have some protection, so you have like a put in place where if the market gets slammed, corrected, crashed, something's going to pay out. You just can't lose 100%, because then if you're professional, you'll lose your job. You get fired. So having puts is like a way of reducing your chances of losing. Okay. If you're in the bull market, right, and everything's going up, great. All your long positions doing great. We're making money in NVDA, Netflix, and the Qs, right, for example. In most of these Dow stocks, also S&P 500 stocks, but if that turns around, it's just mostly losses across the board. That's when your puts will come in, right? This is just an example of a small put, 320 for June. It's March, April, May, so 3 months. And it's way 320, right? But I just did a 30% correction. So what I did on this put, that is meaningful in the sense that if you look at the, I'll show you in a minute, but if you look at the price on the money for the option for 446 put for June, it's like $20, so, or $25. So this 60-cent or $60 option, if it were to go to 320, if the Qs were to go down to 320, would be $25, which is 30-fold return. Just saying. So when you're in these long positions, you have a long portfolio, and you have some puts, and the market corrects, the puts go up, all your positions go down, but the puts go up. So it's kind of like a protection, kind of like a hedge. So that's something to think about. I always want to talk about that. Now here's the call. One thing about options is you're dealing with leverage, right? So if you buy the Qs like a stock, 446 per share, it's expensive, right? It was up 7 today, right? And if you look at, it's up 1.62%, right? However, we also bought a June call, and we went out to the 519, which is 25% increase, 3 months out. I'm not saying it'll go there in 3 months, but you're looking to get a return on the call, looking to ride this bull market. So you can buy a put, for example. You can buy a call, right, in this case. And if you look at this call here, trade price 89. I just bought this morning. It's up $19 already, or 19 cents per 100. And it's up 38% for the day. So this is where the stock, the Q stock, is up 1.62%, but the call option is up 38%, right? So by those metrics, right, you're looking at 20 times leverage, right? 23 times leverage. So that's what a call option can do for you. You can leverage your position. I generally just do a small amount of call options. If you have a decent sized account, maybe 5% at the most in call options, because they're risky, if the market corrects, you can just kiss them goodbye, for example. Your puts, that's when your puts will come in, if the market corrects. But the idea here is you can trade it at a profit. So let's say we get into 89, right? We get 2, 3, 4, 5, 6 times profit, and then kind of ride the bull market. And then at some point you want to pull the trigger. You have to decide that. But it's just a way to leverage. Again, 21 times leverage over the share price, right? You can do this in most any stock, but the Qs are meaningful because it's the whole market, so it's more predictable, right? Kind of like the SPY is predictable, the Dow Jones is predictable. Like if the market's down, the Dow's gonna be down, all the stocks are gonna be down. If the market's up, your Qs are gonna be higher, which is what's happening now. So take a look at that option. Don't follow me necessarily, but just like look at it, watch it move during the day. If it's up 30 cents, right, and the market's only up 1.6% on the Qs, and your option's up 38%, like this is like how you can make a lot of money. If it's 23 times leverage, then $1,000 becomes $1,000 profit in the shares becomes 23,000 on the option. You see. Okay, let's take a look at. This is just earlier in the day when I first bought it. It was up 11 cents and then went to 30 cents. And what is the Qs? Here's the Qs. I went, you can't see them all, but basically the Qs are the top 10, the top 100 tech stocks. So like what, Microsoft, it tells you the percentage, the weight, right? 8.7%, 8.8%. Apple, NVDA. This obviously, NVIDIA, Amazon, Meta, Tesla right here. So like the big companies, like the value of being in the Qs is that you're investing in all those great companies that are just doing great, And it's almost like when the market's doing well, you can't really lose money because everything's going up. And they don't have like the shitty stocks on there. They have the absolute best performers on there. So in a way, it's like helpful to the newer investors who are trying to like pick stocks. You can just pick the QQQ, right? Whether you're buying the shares or you do a call option. But let me warn you on the call option. On the call option by itself, just by itself, the position on a call, buying a call for 3 months out, going up past the strike, past the share price, very risky. You can lose the whole position. Just like 100% could be a loss. Just saying. My strategy is to get 2 or 3 times your money on it and close it. And also my strategy is to close your options 1 month before the expiration. So you're going at least 3 months out on your calls. If it's March, April, May, you're going to go June. In June, September. You see, just go out like that. And I never hold into expiration. I just don't do that. Because why? Because in expiration, if you're at the end of the date and the market turns against you or the stock goes against you, that option, which had value, can be worthless. And because the expiration is around the corner, let's say it's 1 day the expiration or 1 week the expiration, there's no time. If that stock drops, there's no time for it to come back and you can expire worthless. So I always sell my options. I buy them about 3 months out, and I always sell them at least a month before expiration, within 1-2 months. And guess what? If I don't have a profit in that time, I just close it. I take what I can get back. And if you have a month to expiration, you always have something there. There's some kind of value there. Take what you have, close it. If you want to keep going, reopen another one 3 months out. Or you can do a different position. But you always have something. See, the value of closing a month before is you'll never be 100% broke. You always have some money to put in the next trade. That's why it's good. That's why I teach to close your calls, especially calls, 1 month before the expiration. And if you want to keep going, you can open up again. You can roll it back 3 months. The 100 Amgen, Texas Instruments, Honeywell, Regeneron. Regeneron is a big one. That one's like a high price stock, REGN. I'm not in that, but I was looking at it. Applied Materials. So just be familiar with the top 100 tech stocks. They kind of like do that for you, Now, like if you picked one of these stocks on here, I just want to let you guys know, and then that stock didn't perform over time, right? They just kick it off. They just fire that one, then they replace with another one. So they're always reevaluating. They're always diversifying. So like in a way, it's cheating. Like people like they fall in love with the stock because they've had it so long. Maybe it's done well, but if you're a real trader, you always got to be prepared to cut that position if it's a loser, and then replace it with a better position, which is what they do for the Qs, which is what they do the uh, for the Nasdaq, for the Dow Jones, for the SPY. Welcome, you guys. Appreciate you. Give me some likes. Talking about stock market on Fridays. I'll be here next Friday. I have 5 stocks for you plus the Qs, so it's 6, including the QQQ. Talked about NVDA, talked about Apple. Touch base on Netflix. We can go to Netflix. I have some pictures for you. I'm doing my phone, and it's not showing the whole chart. Here's the Qs. When it was up 4 earlier today. Has the volume there. Here's the video earlier today. Can you guys see that? This is NVIDIA up 27. Here's Tesla. Tesla, I think, is a buy. I think it's kind of hit a support level around here, around 192, 195. Now it's coming back up. So I think Tesla's going to go to 230 within a few months. So that's like a 30-point increase, 50% increase. So I like Tesla here. I think it's a buy. Like by time, like NVIDIA is going bonkers. Like by the time Tesla is going bonkers again, it's going to be already 220, 230, and then it's going to be too late. So here you're buying it at a discount, I think. Same thing for Roku. If you don't mind the risk, I think Roku's coming back. It's at 63 today, up 17 cents. Decent volume. I think it hit a support level. It's going to climb back up. It was 108, if you can see this. It was 108 recently. Going to come back up to that level. And then eventually, if you look pre-COVID, a lot of these technologies got slammed during COVID. Now they're what? They're coming back up, right? So they're climbing back up to their old highs. Like Netflix also is climbing back to its old high before COVID. So it's at, 619 right now. I think it's going to go to 640, another 21 points. And then eventually clear the old high of 700. So my 5 stocks today for you are NVIDIA, Apple, Netflix, Tesla, and Roku. And the Qs also. If you want to do call options, if you want to do puts. If you want to do like a hedge, just buy puts on the Qs. Here's that call I bought earlier. It's showing a 50-cent gain. It's showing trade price 89. It's $89 for one. 50 cents profit. It just barely bought it. And the thing's up 11 cents for the day. So if I bought it yesterday, it'd be $11 profit, right? Here's like what I want to show you. So here's my thinking. It's just like psychology. If you look at the calls for going out to June, because we bought the calls for June, but we bought the 519s, right? 520s. But at the money, the 444, if you look, it's $19 at the money, right? And we're paying, let's say, 80 cents, right? So the theory is that if the market does go up to 519, right, those 80-cent options will be $19, and that's where I get like 25-fold return, 23-fold return. So you can leverage that, like 23-fold return means like, again, you put $1,000, you get $23,000, Not saying it's going to happen, but it can happen, and if it does, be ready to benefit from that. Have some kind of trading strategy to benefit from these market moves. Here is the Qs again. 89-cent call. Here's Roku. don't get stuck on Roku. I mean, like, definitely it's my weakest position. And if it does keep going down, I'll be the first to tell you I'm gonna take a loss and walk away. But it looks like it's bottoming here, so I'm not ready to give up just yet. Sometimes I double down, but just once. Like, you can double down once. Like, I don't like to average down. You know about the story where a guy in the golf course, he was in love with his stock. It was at 100. He's bragging about it, telling everybody about it, and then it went down to 90. And then he goes the next week. He goes, "Well, I'm just going to average down. It's about more at 90, so I'm good because my average price is 95 because I bought at 100, but at 90, my average price is 95. I'm good. I'm averaging down." The next week it was 80, and he said, "Well, I just bought more 80." Fast forward, it goes down to like 30 and he drops dead. Okay, so the point is, like, you can't keep averaging down. It doesn't work that way. At some point, if you're an intelligent trader investor, if you're responsible, you got to cut your losses and walk away. So, like, you know, in a way, that is a lesson that you can't just hold on to a stock because you love it, because you're in love with it. If you have a job to do, if you have responsibility, if you're managing people's money, you can't afford to lose that much. So you have to, at some point, cut your losses. A lot of people get stuck. And that's what separates, I think, the average day-to-day investor between the real long-term career investor is that they can make these tough decisions, right? They do the homework to reevaluate these positions, to cut the wheat from the shaft, you know, like to cut the weaker position and put that money, even if it's a loss, even if you're never going to get that money back, put it in hopefully a much better position, whatever you can get out. That could mean cutting your options. That could mean selling your shares that are down. Because why? Because at some point, you got to survive. And if you keep following the trend down, you keep losing money, you could be at the point where you're not going to be able to trade anymore. And then you're going to be wiped out. So it's like why gamblers are addicts. It's like they can never stop. You know. Here's a Q's. See how it's spiking up in the morning. Some nice volume there. Here's Roku. This is what happens when you get a call option on Roku and the stock drops 30 points. You can't even sell. You can sell your option for 2 cents. So, like, when you do call options, I do want to warn you that you got to be willing to kiss it goodbye, because even if it's a good stock, it can always get hammered, and your call option can go basically either worthless or near worthless. Mark, welcome. Best, welcome. MRM Yaires. Reisler. This is Godric here, your stock market mentor on Stock Market Friday. It's March 1st. Talking about stocks. So that's kind of it. If anybody has any questions or comments, I can read the comments here. Again, the 5 stocks I like is NVDA, which I think is going 900. Apple is going to 200. And, like, I don't listen to the news that much. I just, like, heard Apple's having problems with whatever. I never follow that. I always go with the trend, with the technicals. I'm a technical guy. I look at the trend. I look at the volume. The news is kind of like propaganda. And, like, when Kramer is recommending stocks, it's almost like he's trying to, like, read into the reasons why. Like, but those reasons may not be correct. So I think it's more correct to follow the technicals. That's just how I am about it. I wish you could see this whole chart, but it would show Netflix breaking into new highs. Okay, so Netflix to 640, Tesla to 230, Roku to 110, which is a big move. The Qs, I'm not sure how long the Qs are going to go, but right now it's going up and the market's up. We're in a bull market, so just buy some calls, ride the wave, and if you're smart, you can pull the trigger and get a nice little profit. Bitcoin I like, but I don't know much about Bitcoin except I like how it works. Welcome, Alpha, Silver, Really, Wrestler, appreciate you. Send me some likes. I'm going to come back on next Friday. Send me some DMs if you have any questions about stocks. I will evaluate your stock for you. Don't be upset if I tell you it's trash. But I do have a lot of people I talk to, so give me your thoughts, share your ideas. If I can, I'll give you some trades. Today, the trade was buy some calls on the Qs just to ride the bull market. I went out to June, 3 months, 520, 519 strike. 23, possibly a 23-4 return. Who knows? We'll see. And if that doesn't happen, if we crash, then the puts will come in. Hopefully you have some puts there just as a hedge. 5% of your account, 3% of your account. They've been talking about the market getting destroyed, getting wrecked since the 70s, and all the corrections I've seen, they just come back. So I just think the public is mostly wrong. And when you get this trend going upwards, it's like somebody's making money. It's like you can look at why. You can look at the technicals, you look at the volume, you can look at the 10-year chart, and you can see a trend. If you can follow the trend, you can make some money. That's how I do it. Welcome 666. Welcome Judy, Stanley. Appreciate you. Send me some likes. I'm just wrapping up today with your stock market updates. And we covered some positions. We covered some ways to make money. Talked about losing. A lot of people don't like to talk about losing. Appreciate you guys. We're going to close out, but I'll be back Friday. Send me some DMs. Until then.